It's a good world. Good world going bad.
Welcome back to Real Estate Mindset. Today's video is going to be absolutely bonkers, and Zillow flips once again at their forecast on home prices. Now, you guys, I get a lot of comments that are saying,
Travis, you're just saying things because you're a fear monger. You just want to make money.
but I want to remind you guys, okay, in real estate, I cut my arm off of sales. If I really wanted to make a tremendous amount of money doing YouTube, all I would have to do is say, it's time to buy. Think about what I'm saying. The reason why people say that, it's mostly realtors, is so that they can continue to spin the web and narrative that right now is smart, is a great time to buy. When the reality is, you guys, it's not. It's not a great time to buy at all. People right now overall have a triple whammy: high prices, high interest rates, and low inventory. Now, obviously, guys, we go over macro data. If you really want to understand your housing market, you must go hyper local. You have to understand what's going on in subdivisions. Every subdivision is different, and therefore you have to understand what's going on in there. And so understand as well that generally, in order to come up with value, all you need is 3 comparable sales in a subdivision. So technically, if there's 1 or 2 foreclosures or 1 or 2 short sales in a subdivision, it can ruin it for everyone. Think about it. So it can happen fast, but right now it's not. There's still people purchasing, and most people that are purchasing right now are purchasing $1 million houses. Sales are up for $1 million houses, and sales are down for 750 and below. So are prices really going up, or are just the rich continuing to spend? Think about it. Either way, you guys, we're going to get started. We're going to look at Zillow, we'll look at Fred, we'll look at multiple data sources, but I wanted to give a big shout out to Jason Walter. If you guys need editing, hit up this man. He helps me with all of my editing. Jason Walter, I appreciate all your help. Again, you guys, if you want any information on editing, his information is going to be in my description. Mad love to you, sir. Either way, I hope you guys enjoy. So we're going to start by going into Zillow's home value and home sales forecast. Now, remember, you guys, late 2021, they lost hundreds of millions of dollars because their Zestimate is not accurate. And we've kind of learned that by now. A lot of the times we see that their Zestimate fluctuates significantly based on what's reported on MLS. So a lot of times they're not even using the Zestimate to come up with value. This is a fairly brief article, but let's read it. Zillow's home value forecast calls for only, they've changed this significantly, 1.9% growth over 2024. That's a change, you guys. That is a massive decrease, and that's very, very good. Slower than long-term norms, but a welcome slowdown for first-time buyers compared to the rapid appreciation seen over the pandemic. This is an upward revision from last month's outlook, which projected growth of 0.9%. Okay, so I apologize, guys. Last month, they revised it down to 0.9, and they've re-revised that up. I remember this year as well, they were, I believe, in the 3%. So I don't think I did a video on the 0.9. That's very interesting. Regardless, they're flip-flopping like crazy. With interest rates still elevated, the modest upward revision is mostly the result of a slowdown in the growth of new for sale listings. After rising at an annual pace of 21% in February, the year-over-year increases in new listings eased in March to just 4%. Indicating that the market remains quite tight for would-be homebuyers. It remains to be seen how new listings will fare in April. The Easter holiday falling in March and the fact that February was a leap year are likely clouding the broader picture, as well as, again, more $1 million houses are selling than $500,000 houses. I'll show you that data as we make our way through the video. Zillow's expectation for home sales was revised slightly downward. So they're saying 1.9% growth. That was actually a slight revision upward, but they're also saying sales are going to be down. And remember, last year they were horrible. It's going to be worse this year. So they revised slightly downward this month as elevated mortgage rates continue to limit housing demand and sales volume. Zillow forecast now calls for 4.06 million existing home sales in 2024, slightly below 2023's level of 4.09 million. And the previous forecast of 4.1 million existing home sales. Even after a better than expected sales count reading in February, leading indicators of home sales in the coming months suggest continued softness. Now remember, you guys, this is macro data and this is Zillow data. Zillow data is trash, but we use this. We use Redfin, we use Realtor, we use CoreLogic because we have to triangulate. But the best data of all is doing an analysis ourselves by accessing MLS. But nevertheless, guys, I put some really horrible metro areas like Jackson, Mississippi, which is down like 30 to 40% year over year. And they're saying, they're saying that it's going to stabilize somehow and it's only going to be down 0.4. Again, Jackson, Mississippi is down 30 to 40%. Zillow saying it's only going to be down 0.4% year over year. So I don't know that I would trust them, but this whole drop-down menu will give you a better idea of what's going on. Now, according to Redfin, only San Antonio is on the year over year decline list. Let's see what Zillow says. So Zillow is saying that actually San Antonio is going to go up. Very interesting. So again, even though it's down, that's crazy. Look at this, guys. I mean, that's crazy. It's just basically saying it's going to go up. Now, this has other things like home value map as well. This is going to show you where values are going up. And look at right here. There's New Orleans. New Orleans is in the gutter right now, obviously, guys. Everything else is virtually showing up except right here. Portland's down 0.5%. Minneapolis down 1%. Very interesting. San Jose 0.7. San Francisco 1.3. It's just so different than Redfin. San Antonio 0.2. So again, this is different. So here it says San Antonio is down 0.2. But the projected growth is going to be positive. Baton Rouge down, Jackson, there's Jackson, Mississippi. So that doesn't make sense. Down 0.4%. Some of the places, East Coast, look at that. Washington, D.C., very interesting. Finally, Washington, D.C. at 0.2% loss. There's Pittsburgh at 0.3% loss. And this is basically annual change forecast. Okay, so that's a forecast. Very intriguing. So this is year over year. This is insane, guys. And now here's existing home sales as well. If you guys want to see existing home sales, there's a revision there. And then here's existing home sales year to date. So we're not off to a good start, in other words. Let me quickly show you guys the data again that's showing that $1 million houses are selling, not $500,000 houses. And that's going to impact prices. If less small houses are selling, but more big houses are selling, the median sales price will go up. And I'll show you that. This is such an important piece of data that I'm finally reviewing, guys. Again, this is existing single family home sales. This is a year over year comparison. Each column is a price point. And I want to go to the bottom row right here where it says US. So as we can see here, you guys, homes that are priced 0 to 100,000, those are down 22%. Homes that are priced 100 to 250 are down almost 16%. Now the biggest bulk of the pie is right here. 250 to 500,000, those are down 8.1% year over year, and 500 to 750 are down 1.2%. However, when we go above 750,000, it's been blowing up. Okay, so 750 to a million, that's up year over year 5%. But look at this. This is insane. $1 million plus houses. How could you afford that? How could you afford that? $1 million houses plus. There's a plus right there. 14% increase year over year. Now, I'm not saying all of the price increases is because of that, but definitely at least you guys, a portion of the price increases are because the higher price houses are selling, not the lower price houses. Now, just to give us an idea additionally of what Zillow is saying and what they're expecting, and I know they're hyper bullish, I'm going to play us a video, about 3 segments of a video that's going to go into payments and what's going on in the overall housing market. And a Zillow economist who I'm not even sure if they're in their 30s is going to predict what's going to happen next in the housing market.
You kind of zoom out 4 years. The monthly mortgage payment needed to buy the median priced home for sale when rates were down and prices were lower in 2020 was $1,480. Wow. That according to Creative Planning's Charlie Bilello. It rose to $1,690 in 2021. Then it popped to $2,400 in 2022 and $2,550 last year. It's now $2,775. That is a jump of 88% or so in the last 4 years. Now, all of this and lack of homes for sale is smacking existing home sales. They dropped 4.3% in March. Doesn't sound like a lot, but it's the biggest percentage decline in more than a year. To add insult to injury, the cost of insurance premiums, property taxes, maintenance, whatever, have all also gone up.
And that's a very good point, you guys. Mortgage payments are not fixed. Even if you get a 30-year fixed rate mortgage, if you escrow, if you include your property taxes and your insurance, those things fluctuate every year. And for the last 2 to 3 years, they have been skyrocketing. And the crazy thing is that data is not used in national payment to income ratio. They're excluding property taxes and insurance from affordability. You can't do that. Things are blowing up. And look at the payments, you guys. I mean, seriously, an 88% increase in just 4 years for mortgage payment. That's the Fed saying, don't buy right now. And if you do buy right now, understand you're paying a premium in both price and rate, and you're going to settle because there's no inventory. Basically, right? Depends on your market. My market, again, I can find abandoned houses in my market. What about you?
We're going to see interest rates spike, but the price of homes will also go up. I would have said that's crazy because people buy homes on the monthly payment, but that's exactly what's happened.
They shouldn't, though.
Yeah, well, the reality is, though, that about 70% of sellers are also buyers. So sellers.
Okay, guys, for all the people that are wondering that, remember, it's net 30%. So 70% of sellers purchase, all right? But probably going into like how unaffordable things, it's probably lower than that now. But regardless, we get 30% net. There's the info right there. I hope you guys remember that.
Sellers are sensitive in this environment as well. In fact, if we look at the numbers, over March, the fastest appreciating markets were actually the most expensive. They were the California coastal markets. And why was that? Well, those are the places we also saw the most aggressive pullback. Well, a continued pullback, right, from existing owners just not putting their homes on the market for sale. So overall, across the country, we still have this experience of not enough homes, and enough buyers are still willing to move forward. In March, homes successfully priced and well-marketed, popular neighborhoods. The typical home that went pending in March did so still in only 13 days, even at these prices, even at these mortgage rates. Don't get me wrong, there are places where homes are starting to linger more. Florida and Texas are markets where new listings are back up, perhaps for some of the reasons that you have mentioned, where it's harder for existing owners to maybe, choose to hold on to higher insurance rates that were a surprise to them. So there's a lot of different things going all across this country. But
not only that, you guys, and I would agree because I live in Texas, but Texas and Florida, we're getting ransacked by both property taxes and homeowners insurance. But one of the big things that she left out is in both Texas and in Florida, overwhelming new construction. We have hyper supply type numbers for new homes, and that is flooding the market and drastically affecting the subdivisions of existing homes that are surrounded by new homes. And don't forget, the very moment a new home sells, it becomes an existing home. So I think it's really important to see all of the data, but sadly, especially like on the East Coast, some places in the West Coast, Vital Signs, this goes out to you. They don't have a lot of new construction. So if you don't have a lot of new construction, you're in a very, very difficult situation. Now, we'll finish out the video. She's going to go into the boomers. Now, the thing is with boomers, I understand the argument. A lot of people think there's going to be some silver tsunami. People are going to start selling. But here's the thing. Most of the boomers are way better off than millennials. And that's a fact. It is what it is. The question I have to you is, if you're a millennial, is what are you going to do about it? Are you going to save your money? Are you going to get ahead? Or are you just going to keep doing the same thing you've been doing the last decade? In other words, we can all change. We can all get a house if we just make a decision to do it, set our goals, and have our goals shape our approach.
Number of all cash buyers. And they don't care about mortgage rates. They could care less.
Yeah. And those are actually the same, we mentioned Texas, we mentioned Florida earlier, those are areas where people aren't as locked in for a couple of reasons. One, lots of folks, or at least a larger share of the population, are free and clear on their mortgage, right? They're older boomers. They moved down there with equity growth over the past, 15 years. These are the areas that we're not as locked in. This is where we're seeing a return of inventory, where we are seeing home prices falling. Home prices fell over the year in Austin, New Orleans, right? And are getting very, very soft in kind of other major metros in Texas. So, and actually, because of mortgage rates swinging up, we saw record numbers of price cuts. So a sign that things are slowing down out there on the price in front, but on net, not necessarily falling.
And on a net or nationwide average, and that is the truth. But again, I keep going. Really, unless it's going into the subdivision, looking at comps, everything is macro. Real estate is so local. The only local micro data that you can, as a buyer, that makes sense, you got to go subdivision. I will keep talking about that until we have tens of thousands of Real Estate Mindset members that are better at analysis than realtors. That's what I'm going to do. but I need you to learn. And a couple things I want to go over before I exit out of the video, which is first is active inventory. This is going to update probably in about 2.5 weeks, but I wanted to point out, you guys, we have almost double the inventory that we had this time in 2022. So in 2 years, we were able to double the inventory. I want this to be right around 1 million. If we can get 1 million active units, not pending, but 1 million active units, I think we're going to be great, in great shape, because that's where we're at pre-pandemic. Look, December 2019, we had 1 million active units. Okay. In this, again, this is not counting pending or, this is all active. We need it to go up. Hopefully it will start going up. It's usually going to start going up this time of year. Hopefully we'll see that. You can see it really starts going up starting in May. So keep your eyes on inventory. That's a very, very important thing to watch. And again, guys, here's median sales price for all homes. This includes existing and new. You guys can see that, according to this data, this is a quarterly data set looking at that median sales price. Prices have been going down since Q4 of 2022. So much conflicting data. That's why I'm constantly saying hyperlocal subdivision. We also see price decline when we only look at new homes. New homes have been going down since October of 2022. And quite frankly, they're almost down 20%. So you could almost argue the fact that, new homes are crashing in prices right now. And they're not even counting most of the buying incentives, which they have to, but they're not. Now, as far as the 4-week rolling average, you guys, we're almost at a new high, record high. We're about $3,000 off from the record high set around June of 2022, at least according to Redfin. So we haven't hit that record yet, but we are very, very close. Now, when all is said and done, what I really want you guys to understand is we really can't lean on any data. We really can't lean on any professionals. We really need to lean on ourselves. We really need, if we are on the sidelines, to be increasing our purchasing power right in the front end of a recession. I don't think that things are sustainable because income growth, because lack of savings, because of credit card delinquencies, because the price appreciation in 3 years. Now, I understand the bull narrative. The bullish narrative is the inflation's cooked into the prices, things will stabilize, and the consumers will be able to afford it. I just don't understand how consumers are going to be able to afford it if things are going to keep going up. We haven't even paid for our past sins. Now, I could be wrong. It is what it is, but I don't think so. You guys, I'm going out of my way. I'm trying to do the best I can to be completely transparent and honest about my opinion. I'm linking all of the data, but I'm also giving you guys a free home buying class. So if you must buy right now, at least you're not going to be like one of these buyers with the fear of missing out that are ruining everything for the rest of us. If we can remain strong buyers, we will help America. It's the foolish buyers, topped with the greed, corruption, and fraud, that are hurting us. So please, you guys, be a strong buyer. It's only going to help you and the rest of the nation. Now, other than that, guys, if you're out there investing in real estate, you guys already know I wish you luck and I hope you win.